Our first keynote speaker is our very own California Attorney General, Rob Bonta. Our Attorney General was sworn in as the 34th Attorney General of the state of California, is the first person of Filipino descent and the second Asian American to occupy the position. In his previous post in the state assembly, Attorney General Bonta enacted nation-leading reforms to inject more justice and fairness into government and institutions. He has been a national leader in the fight to transform the criminal justice system, banning private prisons and detention facilities in California, as well as pushing to eliminate cash bail in the state. And we at Next Gen Policy have had the great pleasure of working with the Attorney General while he was in the California Assembly on some of these progressive policy advancements. And so we welcome Attorney General Rob Bonta. Do we have you on the line?
Hi, Sam, I'm here.
Wonderful. Thank you, sir. Go ahead. The floor is yours.
Well, thank you for having me. Good morning, everyone. Thank you, Sam, for that very kind introduction. And thank you to Next Gen Policy for hosting this important summit. I really have appreciated our relationship over the many years. Appreciate all of the important work you're doing to expand opportunity and equity and justice and inclusion. And again, I'm Rob Bonta, California Attorney General. But AG, that isn't my only title. My kids know me as Dad. My former students call me Professor Bonta. And my former student loan servicer refers to me as borrower. This fight, like it is for many of you, it's personal. I know what it's like to get that monthly payment reminder. I know what it feels like to write those painful triple-digit, even quadruple-digit checks every month. In my undergraduate years, I received financial aid and I helped make ends meet by cleaning laundry rooms. I carried forward debt from undergraduate school. And then I went to law school and I built on that debt. And I took out some really, really big loans. And I was trapped by high interest rates and debt that was large enough to be a mortgage in some places in this country or more. And in my early legal career, I joined a private practice in part so I could pay my loans instead of pursuing my calling, what my heart wanted me to do, which is to become a public attorney. And our students, they've worked hard to achieve their college dreams, but for too many, their dreams have become horrific nightmares, shackled and trapped by crushing student loan debt. So we must free our future, and we must free it now. We know that if we don't act, this crisis will only get worse. Roughly 70% of students in our nation will walk the graduation stage this summer with student loan debt. 70% beholden to debt just as they begin their careers. We can do better. We must do better. We must ensure every person has the opportunity to get ahead without having to choose whether to pay rent or pay their student loan debt. This is a crisis. There's no other way to describe it. At the California Department of Justice, when we see a crisis, we take action. That's our role. That's our mission. That's our commitment. My team has a long history of protecting students and fighting for borrowers. And under my watch, our commitment has only strengthened. We are cleaning up the mess Trump and Betsy DeVos left, supporting the challenge to the illegal Trump era borrower defense rule that repealed protections for student borrowers scammed by for-profit institutions. We are urging the Biden administration to forgive student loan debt, especially for public servants, through the Public Student Loan Forgiveness Program. And along with many of you, we successfully advocated through litigation and public comment to reform that program. I'm pleased that under the new federal administration, the Department of Education is beginning to put borrowers, not servicers, first. We are extremely glad to see the Biden administration's progress on fixing the broken PSLF program and its commitment to making good on our nation's promise to those who have devoted themselves to serving others. If you are in public service, take advantage of the new PSLF limited waiver opportunity and pursue the loan forgiveness that you are entitled to. Managing student debt is difficult enough, but scammers, diploma mills, and greedy for-profit colleges can make a tough situation even worse. Early this fall, I announced the arrest of a leader of a nationwide multi-year, multi-million-dollar student loan debt relief scam. Whether it's a call center or a major company here in California, we won't stand for illegal practices that harm our students and borrowers. And that is why we are holding for-profit colleges like Ashford University accountable for defrauding and deceiving students. Ashford students, many of them low income, were unable to achieve their career goals and were saddled with unexpected education debt they could not afford. To collect that money, the company engaged in aggressive and illegal practices such as threatening and imposing illegal debt collection fees. We began the trial last week, and we won't rest until they are held accountable. We are also suing one of the largest student loan servicers in the country, Navient, and its subsidiaries for severe misconduct in the servicing and collection of federal student loans. In our litigation, we allege Navient gamed the system and cheated our borrowers of more money than they legally owed. We won't let them get away with it. Today and every day, we will continue to fight to protect our college students, borrowers, their families, and the American dream. College and careers are hard enough. Debt shouldn't make dreams become nightmares. The weight of the student debt, it's crushing, but there are promising signs of hope. At the federal level, we see an administration that cares. At the state level, we are using every tool we have to address this crisis. And at the individual level, activists like you are continuing to make your voice heard. Together, I'm optimistic about the work ahead. Together, we can provide relief for the more than 4 million Californians drowning in $147 billion in student debt. Together, we can free our future. Thank you so much for having me.
Thank you, Attorney General, for those words and sharing your vision for the work at your new post and continuing the great fight against student debt and student loan servicers here. Thank you so much for joining us today. I'm happy to introduce our next special guest speaker, Chief Operating Officer at Federal Student Aid at the U.S. Department of Education, Richard Cordray. Richard Cordray is responsible for strategic and operational management of U.S. Department of Education Office of Federal Student Aid. He brings extensive leadership and expertise to this role, as well as a commitment to serve consumers and American families. His public service includes several senior state and federal positions, including as the first director of the Consumer Financial Protection Bureau from 2012 and 2017. We've also had the great pleasure of working closely with Mr. Cordray to establish a great resource here in California for borrowers and anyone with debt through the creation of the California Department of Financial Protection and Innovation with Mr. Cordray. And so we thank you for being here today. Mr. Cordray, do we have you on the line?
You do.
Awesome. Thank you. The floor is yours, sir.
All right. Thank you, Samantha. And I particularly appreciated Attorney General Bonta's remarks. I was an Attorney General myself at one time, and I know the role. And I will say that he went from borrower Bonta to Attorney General Bonta, and that's just a great example of what federal student aid is all about. Because he got federal student loan assistance to get through college, and then again to get through law school. And as he said, it took some time and effort to pay those back, and it does for people, often many, many years, and sometimes frustrating for many people. Now he is one of our leading public figures in California, and I know that job, and it's a tough job, and I know he will do it well. My job now is to serve as the head of federal student aid in the U.S. Department of Education. Federal student aid is an arm within the Department of Education. The Department of Education has approximately 4,500 employees, and FSA has about 1,500. So it's a huge chunk of the Department of Education. And our job is to help enable financial assistance so that every American can get access to the loans and grants that they're eligible for and be able to pursue their dream of higher education. In fact, we now describe our motto here as we are all about enabling the American dream. And that's something we take seriously and we do every day. And we put out about $120 billion worth of funding every year that makes a huge difference to individual students and their families in terms of having different opportunities than they otherwise would have been limited to having. Let me just say that it is a busy time at FSA. There are a number of work streams coming together right now that are heavy loads for us all at once. Number one, we've all been dealing with the oddities and the serious consequences of the pandemic. And for federal student aid, what that has meant is since March of 2020, every federal student loan borrower who has student loan debt, and that depending on how you count it is in excess of 30 million Americans and their families, has not been required to make payments since March of 2020, their regular monthly payments on that debt. That time is running out as we've been recovering from the pandemic. Many things are going back to normal. That's not necessarily good news for a lot of people who've been able to defer their payments. But come January 31st, 2022, that is about 2.5 months from now, people will be returning to repayment is the way we're describing it. And the one thing we need is we need everybody to be spreading that message far and wide. Not because it's a pleasant message, but because we don't want people to fall into delinquency and default and all the negative consequences that can have for your financial future, because they either don't believe they're going to actually return to repayment this time. There's been some false starts on this, but this is now a final deadline, or because they're having difficulty and won't be able to make those payments. We have lots of alternatives available, income-driven repayment plans and other things that we want people to reach out and sign up for, and that may be the best option for them. If people are able to pay and they just want to make sure they don't miss or make a mistake, they could be on an auto debit plan for us, so it's automatically taken from their bank account each month, and they don't have to worry about it if they're in a financial situation to be able to handle that. So the return to repayment is a big undertaking. I don't think somebody said the other day that in the history of consumer finance, there's ever been a case where 30 or 40 million people stopped paying on an obligation for 2 years and then were expected to start paying again. And we don't know how that's going to be, but we want it to be as successful and smooth as possible. So please help us spread that word. And we have some how-to kit tools and email messages that you could share, and we'd be glad to share those with you. We could certainly use your help. People will be hearing this, and they are hearing it again and again from FSA directly. Some people listen to us, some people don't. People will be hearing it and are hearing it from their loan servicer. Some people listen to them, some people don't. If they hear it from you, they might get it. It might reinforce the message. And again, we want them to stay out of delinquency and default. At the same time, and Attorney General Bonta mentioned it, we have new flexibilities around our public service loan forgiveness program. This has been a marvelous message that Secretary Cardona delivered last month. And there is a year of a limited waiver for people to sign up and get the credit they deserve for public service work that they have done, where they've been repaying their student loans. And for various reasons, very frustrating to people. I wrote about it in my book, Watchdog, about my time at the CFPB. Many people have failed to get the relief that they thought that they were entitled to. And there were reasons for that. And many of those reasons and obstacles have now been removed by the Secretary's announcement on this. And if people have been told no before, that you didn't qualify, even though you were working in public service and you were making payments on your loans, particularly if those were so-called FEL loans, you may have been told many times before no. The answer now may be yes. It is worth reaching out to us to see about that. And again, we'd like you to help us spread the word to police officers, firefighters, people who served in the military, teachers, nurses, everybody who might qualify as a public servant and or working for various nonprofit organizations can qualify you as well if you have 10 years of qualifying payments. So we want people to have that word, and we're working hard. And the forgiveness numbers, the people who've had their loans totally discharged, have spiked as a result of this announcement and tripled and quadrupled already. Many people have had their payment count toward forgiveness advanced, and we want you to make sure everybody who could get this relief is getting it in return for the public service they have done over the years. The third thing is we are imposing a lot more accountability and performance requirements on the people that we work with. That is loan servicers who have caused a lot of problems for borrowers in the past. And by the way, loan servicing is a hard business. There's no two ways about that. Whether it was mortgage loan servicing I dealt with at the CFPB or student loan servicing now, it's a hard business. They don't always get it right, but people are entitled to have errors fixed and things handled correctly. And we have new penalties and other incentives in our contracts to make sure that happens. Also schools, some schools have taken advantage of students, sometimes for years, not delivered value for the money. And many for-profit schools fall into that category. We saw that when I was at CFPB. We took actions against the Corinthian set of colleges and the ITT set of colleges. There are others, and the Attorney General mentioned Ashford College, which is embroiled in a lawsuit that his office has brought against them. We are looking at that situation as well. And if you have other issues that you want to raise to our attention, we welcome that. We've just created a new Office of Enforcement to deal with these types of issues, and we will take them seriously, just as I did at the Consumer Financial Protection Bureau. So in any event, we have a lot going on at FSA. We're eager to hear from you about the problems and issues and concerns and frankly, successes that we're having for California student loan borrowers and students. And you know how much I appreciate the work that this group is doing. I was working alongside you up until taking this job at FSA. I'm cheering you on, and any way that we can be helpful to you and helpful to Californians, we want to do it. So I was glad to have a chance to come and speak today. Samantha, thank you for the time.
Thank you, Mr. Cordray, for sharing all that crucial information. And we will definitely be emphasizing that throughout the summit to make sure folks have the right info getting into 2022. So thank you so much, sir, for joining us today. All right. Our next opening speaker is Assemblymember Mark Stone, representing California Assembly District 29. In response to federal inaction in mounting student loan abuses, Assemblymember Mark Stone crafted a two-pronged approach to addressing this predatory behavior, a licensing scheme and consumer-facing protections. With that, his work has shown up in several bills over the last couple of years, starting with AB 2251 in 2016, to help create a program within the Department of Financial Protection and Innovation to license and regulate student loan servicers. That was followed also by AB 376, the Student Borrower Bill of Rights, establishing very much needed consumer protections for borrowers. And then most recently this year, AB 424, to provide protections for those with private student loan borrowers. Those folks usually get left out on some of these efforts. So definitely happy to have Mr. Stone look out for our private student loan borrowers as well. And we are definitely happy to have him back again this year at FMF. And we thank you for carrying these critical policy changes here in California, sir. So Assembly Mark Stone, feel free to take it away.
Thank you, Sam. I am very happy to be here again at FMF and talking to student loan borrowers, the consumer activists who are here, and everyone who is interested in this issue. It is a very significant issue. The numbers are staggering. In California, just California, 4 million borrowers, and that represents about $150 billion in outstanding debt. At the national level, that's an order of magnitude more. Student loan debt is second only behind home mortgages for the amount of debt. And we saw what happened with home mortgages when an industry was unregulated and unmonitored. People really suffered. And we're heading into that, or we have been on that path with student loan debt, especially back in 2016. So we introduced a bill back then in order to work with what the feds were doing at that point in time and see how California could strengthen our own rules. And then lo and behold, the administration that took over in January of 2017 just pulled the rug out from underneath all student loan borrowers and walked away from commitments to working on this very significant issue. So the bill that we had became very, very timely. And what we wanted to do was hold the student loan servicers accountable for their behavior and for how they were dealing with the borrowers who should have been seen as their customers. Navient came to us and said, oh, we're the good guys here, so you don't need to license us, or you don't need to build regulations around us. Turns out Navient is being sued in, I believe, every jurisdiction that they do business. And they were very clear when they were commenting to members of Congress in hearings on the Hill. And this was a Congress that was friendly to them, and the then administration was friendly to them and not to student loan borrowers. And Navient said they felt no obligation to the borrowers, but to their shareholders. So the decisions that they make and the predatory practices that they've been engaged in are to your detriment, not to your benefit whatsoever. So we built this licensing program that is an attempt to hold them accountable and have the state of California collect data, provide some oversight, and be able to go after the servicers with their negative practices or practices that hurt California consumers. And lo and behold, as we did that, I believe fairly quickly, over a dozen states started to look at what we had done and adopt their own. So the message is clear. If the federal government is going to back off on its responsibility to consumers and to the amount of debt that is being carried here and the detriment that that has in our economy and to all of those individuals, then the states will step up and the states will take some responsibility. Not all states, unfortunately, but California and quite a few states have been really working to try and protect the student loan borrowers, the consumers in their own state. Just for California, that $150 billion of outstanding debt is not productive debt. It is not productive in our economy. That money is not being circulated, is not allowing people to be able to grow, move into their own professions and roles, whether it's teachers or firefighters or other professionals. You heard Attorney General Bonta, who's been a great advocate for consumers, and the Attorney General's office in California has been a real partner. So some of these bills are giving the local agencies or the state agencies, and including the Attorney General, better tools to go after individuals. The next bill we did, because any good consumer protection needs to have what they call twin peaks. One facing the industry, and that was the student loan servicer program, the licensing program that we did. And another needs to look towards the consumers themselves. So we created a Bill of Rights for student loan borrowers that give you who are borrowers much more confidence and the correct information. It's an obligation of the servicers to give you the information that you need to make appropriate decisions. And instead of keeping you tied to interest payments for much longer than you should otherwise, they have to give you good information. And if they don't, then local prosecutors, the Attorney General can go after them. And we built into that a private right of action so that you have some tools to go after the worst of the actors. And then last year, we also was very concerned hearing some of the stories we did from the private schools and the way that they would treat borrowers. And too many borrowers were getting default judgments against them on incorrect information. And because of the way the legal system works, if a respondent doesn't respond in time, so the borrower is being sued and doesn't know to respond, then I don't know why you would. This is a very complex system. Then the servicer or whoever they pass the debt to, the collection agency or whomever, would just go to court without even having to prove that they own the debt, without even having to prove that they have the correct borrower, without even having to prove that the numbers are correct, get a default judgment. That default judgment carries significant weight in the legal system. So now what's going to happen is if they're going to go after a borrower, they have to prove up front that they have the right to do so. That is a significant change in preventing these predatory practices and these lawsuit mills that some of these collection agencies were utilizing to go after really unsuspecting consumers. So we're continuing to work in this field and make sure that California is as strong as possible. And right now, California has the strongest protections for student loan borrowers of any state. And we've been working with Richard Cordray. We've been working with folks who are at CFPB and making some big strides before the rug got pulled out from underneath them at the federal level with the previous administration. And now that this administration is taking their obligation to consumers and consumer debt seriously, we're hoping that we can see some of the work that we've done in California be more broadly applied across the nation. That would be the right answer. That would be stronger protections for student borrowers across our nation. But as a California legislator, my obligation is to set standards for California. We know that the rest of the nation watches what we do and will follow suit. But if every state enacts laws that are a little bit different, I'm afraid we're going to be leaving too many borrowers across this nation without appropriate tools. So we're trying to protect California consumers, but we're also trying to create a template for how states, or hopefully the federal government, can do a much better job for California consumers. So I appreciate that you're being here, whether you're interested in the policy, whether you're trying to make sure or trying to figure out what tools you have to get out from underneath and manage the debt that you have at an appropriate level, or you're just sort of curious about how all of this has come together and is working. This is a great opportunity to be a part of some conversations, to learn and get information about the tools available to you and to other borrowers to help manage this debt. So I appreciate the sponsors of this program and everybody bringing this together. This has been an area of significant debt, but without a lot of information for far too long. What you learn here, spread to others, talk about this. Everybody understands mortgages, or hopefully better now after the mortgage crisis. We cannot see the same level of crisis with student loan debts. Hopefully what we're doing in California and what Richard Cordray is doing at the federal level now and others will keep us ahead of predatory practices, bad actors in the industry, and we can come out at the other end with people able to be productive in our economy and get out from underneath this crushing debt. So thank you for your interest, and I hope you enjoy the conference.
Thank you, Assemblymember Stone, for fighting with us on the good fight here and continuing to be a strong champion for us, especially in California. And thank you for staying on this morning. So we are going to move on. Before we get on to our first panel on the state of student debt in California, we are going to have a quick word from our executive director at Next Gen Policy, Arnold Sowell Jr. Take it away, Arnie.
Thank you, Sam. And I'll be very, very brief because I want you to get to the panels and the activities for today. I first just want to thank Attorney General Bonta, Director Cordray, and Assemblymember Stone for their leadership, for their insights, their partnership, and for their steadfast engagement in the issue of student debt, and in particular for the participation today in the Free My Future Summit. I know that we will continue to partner with them and continue to work with them on these issues as we continue to do our work here at NextGen. Just very quickly, NextGen Policy is an equity and justice-centered nonprofit organization that Sam mentioned in her opening remarks. We were founded in 2016, and our mission is to address issues in the social, gender, racial, economic, and environmental realms that are inequitable. And we do so through public engagement, grassroots organizing, legislative advocacy, and democratic civic engagement. And our work spans a range of policy issues. Student loan debt in the area of education is just one of the pillars of the policy areas that we work in. We work in everything from criminal justice reform to affordable housing, to food insecurity, to climate change, to access to healthcare, voting rights, and education from, as Sam would say, from cradle to career. And in the education arena, that work centers around access, equity, affordability, and time to completion. And from the inception of NextGen, student loan debt was at our forefront and one of the topics that we wanted to work on. And Mr. Stone has outlined a number of bills that we've engaged directly with him on that have sort of set the table for the landscape here in California to be, as he mentioned, the leader as it relates to the regulation of the student loan servicing industry, a leader as it relates to providing and empowering student loan borrowers, a leader as it relates to consumer protection sort of across the board. And as he mentioned, in just this past year, a leader in attempting to try to address a lot of the sort of illegal proceedings that were being brought to bear against those who had private student loans. I want to also thank the co-sponsor of this event and very sort of like-minded stakeholders with us, because they were there from day one in each one of those fights. The Student Borrower Protection Center, Young Invincibles, the Student Debt Crisis Center, Consumer Reports, and let's face it, there are many, many other sort of stakeholders that were engaged in this fight as well. But those are the folks that have been in the trenches with us from the very beginning. And so I just want to conclude by just sort of saying that Next Gen Policy will continue the fight against predatory and illegal practices that have been brought to bear by the student loan servicing industry. We'll continue to partner with like-minded stakeholders to advance the cause of student loan borrowers, and we'll continue providing sort of forums such as today's summit to empower and assist borrowers with resources, with information, and with plans of action. We trust that you're going to enjoy and find today's and tomorrow's panels and activities and proceedings extremely helpful. We're looking forward to trying to provide you with as much information as we possibly can to provide individualized attention to the particular issues that that you're facing as you try to address your particular student loan issues. And we'd also would just sort of ask that you would continue to engage with us at Next Gen Policy on not only this issue, but on the range of issues that we work on, issues that may be important to you, may be important to your family, and may be important to your community. And if you get an opportunity, take a look at our website, nextgenpolicy.org. You can learn a lot more about the work that we do, and we trust that you will continue to engage with us. And with that, I just want to say, have a great Free My Future Summit. And thanks so much, Sam.